Good afternoon and welcome to Facebook Live with the Kansas City Star Editorial Board. I'm Derek Donovan with the board and I'm here with my colleague Michael Ryan. And we are very pleased to welcome today a special guest, David W. Bland. David is the author of the new book, Slings and Arrows, How Toxic Narratives Perpetuate Poverty in Indian Country. This book is actually launching tonight here in Kansas City, and we'll talk a little bit more about that. Welcome to the Kansas City Star.
Thank you, I'm excited.
Well, so in your elevator pitch, can you tell us what your new book is about?
It's about the legacy of bad public policies that resulted in stories that were told about people and about minorities that then perpetuate poverty, and how we have to find a way to stop these toxic stories and to listen to data and to the reality and not listen to the stories that sort of give us comfort on how we can discriminate. So that's sort of in a nutshell.
Well, you've written about the fact that stories really shape our reality. The stories that we tell ourselves shape our reality.
Yes.
And the stories that you're talking about have been unfair. Can you talk about both of those things, the fact that we shape our reality with stories and how these stories have been unfair?
Well, I'll start with how they're unfair. You know, we've all heard, many of us have heard the welfare queen story that was perpetuated by Ronald Reagan in his first campaign against Jimmy Carter. And it had a kernel of truth to it. There was a woman who had multiple identities and she was committing a fraud against the welfare system. But the level of fraud was minuscule in comparison to the overall dollar amount. But the reality became that people who used the welfare system were abusing it and were fraudulently taking advantage of the system. And the same thing was true with the food stamp program. The common perception is that the food stamp program is riddled with fraud. It's actually one of the least fraudulently used programs in the American sphere of public assistance. But what happens is that then people hear these stories, they hear about welfare fraud, and then if someone's receiving food stamps, they have a stigma attached to them automatically. You're more reluctant to engage with them, you're less likely to hire them, you're less likely to rent to them, and that perpetuates that cycle of poverty. So that's how, and these stories run the gamut. You know, in Indian country, they're different than they are in the African American community, but they all have the same kernel that they pigeonhole people and stereotype them, and they're not true.
I think a lot of people would be quite surprised to find out how little food stamp assistance people get. Just the dollar amounts, they're not huge dollar amounts.
It isn't.
Yeah. One of your anecdotes in your book, you write about an acquaintance who talked about seeing a woman at the grocery store buying beef with her SNAP card, and you talk a little bit about how, well, he might have seen that one instance, but it's not necessarily illustrative of the data, right?
Right. I mean, the data shows that by and large, people who use food stamps spend their food dollars just like we do, just like everybody else does. They may on occasion buy the extravagant cut of meat, but not very often because they have to stretch that dollar. And as you said, the dollars are really minuscule. It's a very small amount of money. And so the data just simply does not bear out that food stamps are used on extravagant purchases. And of course, you can't buy any paper products, you can't buy feminine hygiene products, you can't buy cleaning products, you can't buy diapers. But yet, you know, families with young kids have to have those products, but you can't use food stamps to buy them. And so the perception is again, it's not the reality, but it stigmatizes people.
Could we talk about your company, because it's really fascinating to me, and how the arc of your personal story, in short summation, has shaped you?
Yeah, it certainly has. Well, thank you, and I will, one caveat is, the company is now my daughter and son-in-law. My wife and I are chairman and vice chairman of the board, and they ask us for advice on occasion, but we offer it on occasion. So it's their company now. But you know, I started it after having a stint at the Federal Reserve Bank of Minneapolis, where I was the manager of community affairs, and that job was to have outreach to the minority communities in the 9th Federal Reserve District. And the 9th Federal Reserve District is the largest of all the reserve districts. It goes from what is essentially the eastern third of Wisconsin through Minnesota, the Dakotas, and Montana, and includes the upper peninsula of Michigan as well. So it's a massive district, very rural in character, and the primary minority, if you will, is Native Americans. And so my job was to see what the Federal Reserve Bank could do to bring capital and banking services to the minority community, as well as get banks to have a better sense of how to lend and provide capital in Indian country. And what I found was that being a non-banker when I got that job, I'd had a career in housing, that I really didn't, there wasn't a whole lot that the Federal Reserve Bank could do to make a difference in the daily lives of what are the poorest people in America. Native Americans as a group are the poorest minority, is the poorest minority in the United States. And it became very frustrating. I knew housing, and they had a housing crisis in Indian country, and the Fed couldn't do anything about it. So I left the Fed having nurtured a good sense of what the economic conditions and the social conditions were in Indian country, at least as a white guy coming there anew, and decided to create Travois to try to do what I did know how to do, which was affordable housing, and to bring that to Native America. The real odd thing about the way the company started is that it utilizes a program known as the Low-Income Housing Tax Credit Program. There are also analogous programs on the commercial side we also use. But the Low-Income Housing Tax Credit Program was started in 1986, and there had never been a project on an Indian reservation, even though by 1995 or so, it was the predominant force, the primary mechanism to develop affordable housing nationwide, everywhere, except in Indian country. And so we identified a gap in the marketplace and said, well, we can fill that or try to fill it.
So why was it not taking off among Native Americans?
It's a highly competitive program. And so in the states, it's a federal program, but the states run it. And the states really didn't have any incentive to add any more competition. The credits were used up practically overnight when they were released, and there were plenty of non-native groups using them, so they didn't have any interest in outreach to the tribes. Historically, there's been a hostility between Native American tribes and the states in which they reside, partly because tribal lands are not taxed, and states are sort of, they feel a sense that they've got to provide services, although they rarely do, and they have to pay for these services and they get no tax money in return, so there's that built-in hostility. And then from the tribal side, tribes view themselves, and they are sovereign entities. They are sovereign nations, and they are not analogous to a state or a city, but yet the state kind of wants to see them that way. So the states simply didn't tell them about this program, and the tribes didn't know about it. And so we were lucky or smart, however you want to look at it, to bring it to the tribes.
So is it fair to say that your company, Travois, does housing and economic and environmentally sound development in?
That's a very good way to put it.
Okay.
Yes.
Yeah, so I'm wondering what impact you feel you've made, and I guess I'm also interested in why you named it what you did.
Okay. Well, the impact is clear. We're now at over 5,300 housing units and over $1.5 billion in housing and critical economic development. Now here's an odd statistic. We are second only to the federal government in the amount of capital we have brought to Indian country for those two purposes.
Your company?
Our company. We've got about 50 employees. Second only to the federal government. Now that's kind of pathetic, that we've brought $1.5 billion, and we're proud of that, and we've done great things, and 5,300 plus families have a better place to live now than they had before. But it should be so much more. It should be many, many billions of dollars more, and that's a real national tragedy. The name Travois, a travois is two trailing poles pulled by a horse or a dog that was used primarily by the Plains Indians, and they would pile their goods on the travois and then go to the next hunting ground, or their winter quarters or their summer quarters. And the metaphor for us is, we want to be that travois. We want to help you get from one place to another. We're not going to take you, we're not going to do it for you, but we'll help you. And the tribes are very sensitive to that. They understand what their needs are, and they know what to do. They just need a little bit of assistance on some of these very complex programs that they have been sort of ostracized from.
I'm really struck by a parallel here between the payday loan industry, which, as you know, has a lot of players in the Kansas City area, and what you're doing with Travois, because a lot of people have explained to me that the real tragedy of payday loans is that the industry preys on people who don't know they could have access to banking through traditional methods. And there's just sort of an education gap with a lot of folks that, of course, it's in the payday loan industry's interests not to let them in on. And, we've talked to bank presidents who have said that they would love to expand into the low-income neighborhoods, and they just have a hard time finding customers who know what they offer. So do you see any kind of a parallel there?
Well, I think there are in the sense that payday loan industry victimizes people, and they know how to identify people who are going to be their clients, their customers, and those customers are people who have been marginalized. And so tribes, in a sense, have been historically marginalized. And so in that sense, there is an analogy. I mentioned in my book the Dawes Act, which was, I think, in the late 1890s, a senator from Connecticut who knew nothing about Indian country. He decided that there was surplus land, too much acreage for too few Indians, even though it was their land. They declared it surplus, and they sold it. And the tribes did not get the proceeds of that. The federal government got the proceeds on that. Hundreds of millions of acres were lost as a result of the Dawes Act. But that was a determination on the part of the United States Congress, who knew nothing whatsoever about the life of Indian country. And they victimized them. And they took away what amounts to their largest asset base, which in today's dollars would be trillions of dollars of value, that was completely stolen, basically legally stolen by the federal government. And so, tribes have been victimized historically in that sense too. So, the payday lending kind of analogy is a tough one, because I know what you're getting at, but I don't want to also give the sense that they don't have other resources. They do, but they are nonetheless a marginalized group in the United States.
Well, understanding that conditions everywhere vary, can you summarize the conditions that you have seen through the years in Indian country, and what policies could we change to improve things?
Well, the conditions I've seen are stark. Now, it's sort of self-selecting. Travois works in the large land-based tribes that are fairly remote, and there are the poorest tribes, because they need our services more than anybody else. Mm-hmm. There are some tribes in close proximity to major metropolitan areas that have casinos, and they do fairly well, but there are not very many of those. They're few and far between. And the conditions on Indian reservations today, I mentioned in the book that when the United States when we came out of the Great Recession, 2008, 2009, when we started to come out of that, we went from what was I think at its worst, about 10% unemployment. A tribe today that had a 10% unemployment rate would be phenomenally successful. There are tribes that have never had unemployment below 30%. That's worse than the Great Depression era, and they've never had unemployment below that number. So conditions are terrible on many Indian reservations, hundreds really. There are over 570 Indian tribes in the United States, federally recognized Indian tribes. And the conditions on the great bulk of them are horrendous. So did I answer?
Yeah, what policies can we change to
Yeah.
improve that?
Well, that's a tough nut. One of the answers to the Dawes Act that basically stole the land and converted it into what's known as fee simple land, where people could borrow against the land and so forth, was to declare much of Indian country to be held in trust. So the land is what's known as trust land, can't be alienated in any way. It can't be borrowed against, and you can't use it as collateral. And that has held back billions and billions and billions of dollars of worth, of value, that the tribes can't unleash because they can't borrow against it. So if a tribe has a farming operation, for example, has vast amount of land held in trust, it's farmland, they can't take the value of that land in order to buy capital equipment, combines and tractors and seed and so forth. One of the policies that I would love to see happen would be to find a way for tribes to get access to the inherent value of their land without it alienating and being subject to the loss that is protected by the trust status. There are various guarantee programs to do that in some respects, but you can't really utilize the underlying value of the land as collateral. So that's one policy position. Another policy position is something called the Community Reinvestment Act. The Community Reinvestment Act, CRA, was started in 1977, and it has gone through many iterations, and it's undergoing one right now where they're trying to, in my view, take the teeth out of the Community Reinvestment Act. The CRA is a law that basically says, banks, you get all these benefits. You get FDIC insurance, and we cover you, and in return for that, you have to make an effort to lend to low-income people and to provide capital to low-income people. Having said that, banks are restricted. They can't make bad loans. They can't lend to people who don't have the capacity to pay the money back. So what CRA did was it sort of graded banks on their performance. How good or poorly did a bank behave with respect to its, making loans to low-income people, providing access to capital to low-income people, making access to other banking services. And if they did a good job, then they could acquire another bank. They could open up an ATM. They could do some other banking expansion-related activity. But if they were graded poorly, they couldn't do that. I mean, they would be restricted from even opening up an ATM machine. So banks had a real incentive to do something with respect to CRA that proved they were performing adequately to meet the capital needs of low-income families. Well, they're trying to take the teeth out of CRA. And CRA also has other issues where it sort of focuses on urban areas, because that's where banks are and that's where their customers are. It needs to be broadened a little bit and make it more accessible to rural areas in a better way. And there are some efforts to do that, but it's not enough in our view. So those are two policy changes. Policy is tough. I don't know. We don't have the answers in terms of policies. But I can say for one thing is one thing that would really help would be the stories. Stop repeating the things that aren't true and be a little more of a skeptical consumer of stories. We all hear these things, and so many times we'll just go, oh yeah, I've heard that before. But you don't then say to yourself, I've heard that before, and has that always been untrue? Or has it always been true? It just sounds a little fishy. But we don't go that far. We don't say, I don't know. I'm not buying that. We don't go there. And we need to become real skeptical consumers of these noxious stories.
And Travois obviously has stories of its own to tell. And by the way, you mentioned you founded it here in Kansas City, and it's now run by your daughter and her husband, who is well known to a lot of people in Kansas City, Phil Glenn, who ran for mayor. As a matter of fact, we on the Star's editorial board endorsed him in the primary last year. He has a lot of good ideas about TIF financing and other things that are very near and dear to our hearts as well. But to talk about stories, let's close out by you sharing a story from your book that has particular resonance for you.
Well, there are two. If I can, I'll take some time. When I first started at the Fed, I was on a plane, and as you do, you start chatting up your seatmate, and he asked me what I did for a living, and I described it. I told him that I was working in Indian country, and he said, "Oh yeah, I grew up near the Pine Ridge Reservation in South Dakota. Let me tell you, I knew this man who got a brand new house, and he took a chainsaw and he cut a hole in his house so that his horse could drink out of the bathtub." He said, that's the problem with Indians. They won't take care of things. And I sat back in my airplane seat and I thought, now that's just not true. And so I questioned him, and it got a little tense. We had a long plane ride, so I wasn't going to, be too, I wasn't going to call him a liar. But it's basically not true. My wife, Mary Ann Roos, she heard that same story about a different reservation. In this case, it was about Leech Lake in Minnesota. Now they're Ojibwe. That's not an equine-related tribe. They don't have horses. Horse was not a part of their culture. I heard it about 6 different reservations over a 5-year period. And it's untrue. It's an absolutely untrue story. If you know anything about horses, you know that a horse isn't going to stick his head in anything. They're prey animals. They have to be able to see around them. They're not going to stick their head into a small hole in a house and drink out of a bathtub. But that story gave that man comfort because he wants to believe the tribes won't take care of things because he sees the poverty and he's got to have a rationale for it. And it's just not true. So we've got to stop telling those stories. The other story I want to talk about is a man who I have great respect for, is Ron, his horse's thunder. Now, he is a direct descendant of Sitting Bull, and he actually has a striking resemblance to Sitting Bull. But Ron was the president of Sitting Bull College, which is the college on the Standing Rock Reservation in North and South Dakota. And we had a project we were going to do, and Fannie Mae at that time was going to be the investor in this project. And we laid it out for them. It was a great project because they help married students at Sitting Bull College. And Fannie Mae came back and said, nah, we're not going to do it. And Ron sat down with the investment officer of that Fannie Mae and said, why are you not going to do this project? And he said, we just don't have faith that you can pull this off. You got to have all these exemptions for students, and we don't think you can do it. And Ron looked him in the eye and he said, we're going to make this work. And he got up and he called Franklin Raines, who at that time was president of Fannie Mae, chairman of the board of Fannie Mae. And I couldn't hear, but he got to Franklin Raines, which is pretty hard to do. And within 15 minutes, Franklin Raines was calling that investment officer, and we got that project financed. But that wouldn't have happened had it not been for Ron, his horse's thunder. And if I have time.
Sure.
Ron's a wonderful guy, a rancher and a lawyer, as well as former president of the college. Every year, he takes a group of young men and women from the Standing Rock Reservation on horseback in December of every year, and they follow the path that Chief Bigfoot and the Miniconjou tribe took when they left the Standing Rock Reservation and went to Pine Ridge, and they were encamped at Wounded Knee in 1890. And because of mistrust, and there was something going on called the ghost dance, and the American cavalry was scared to death of the ghost dance because it gave the warriors a sense of fearlessness. It didn't, but that's what the cavalry thought. And they ended up massacring over 200 people at what they called the Battle of Wounded Knee. And Chief Bigfoot, who was frail and dying, ended up being killed. And every year, Ron, his horse's thunder, takes a couple hundred kids by horseback in the dead of winter from Standing Rock to Pine Ridge to commemorate that. And it's an incredible event, arduous, but it gives these kids a sense of what their history is. And Ron is an amazing guy.
Well, David, we really appreciate you joining us. And by the way, he is here because Slings and Arrows is going to be officially launching tonight. It's Wednesday at Rainy Day Books at 7 p.m. So you'll be there signing copies, I would assume?
I am.
All right, great. Well, David Bland, we really appreciate you coming and talking with us on Facebook Live. I am Derek Donovan with Michael Ryan of the Kansas City Star Editorial Board. Thanks for coming along.